In this video, I'm going to share my favorite ideas from the book, The Real Estate Game by William Poorvu, who's a longtime professor at Harvard Business School. I've been investing for 18 years, and this is one of my favorite real estate books. So whether you're a small investor with a couple properties or someone growing a huge real estate portfolio, I think you'll really like this book. Let's get started. First big idea from the book is something called the game diamond. So as you can see from the title of the book, it's called The Real Estate Game. So there's this metaphor that you can look at your real estate investing as a game, and the purpose of this book is to help you make better, more intelligent decisions while you're playing the game. So one of the biggest ideas that I have taken away from learning from other investors is to try to see things through their eyes. Real estate's a complicated game. There's a lot going on. And if you're a new investor or somebody who's growing and learning, you're gonna have to learn it piece by piece. But what you can do is try to borrow the lens, almost like the glasses or the frame of reference of other investors and how they look at the world. And this is what William Poorvu shows in this book. This is basically the lens, the way he looks at a real estate investing strategy, a deal, a transaction, his whole business through this lens called the game diamond. So you can think about this. Let's say you're playing a game. And there's 4 stacks of cards. You've got the external environment. You've got the players or the people who are actually involved in the real estate game. That's the top and the bottom. You've got properties. You can think about that as the houses, the multi-unit properties, the land, whatever you're buying. These are the physical assets that you're buying. And then you've got money. So wherever you're getting the money, whether it's your own down payment, whether that's borrowing from banks, whether that's going out to other different kind of capital markets, there's all sorts of different variety in each of these stacks, but you start the game by picking a card. So maybe you inherited a property, or maybe you stumbled across a really good deal on a property. So you started by picking the property card. But the point of the game is that you have to assemble a match. You've got to get 4 cards or more that match in order to play and win the real estate game. And we'll talk about what it means to win, how you keep score in this game, but that's really the simple approach to a very complex game, is that you've got to match these up. And this is a dynamic game. You know, the capital markets, the interest rates, the where you can get the money, that changes all the time. It also depends on your situation. So if you pick a player card, if you're a small investor, that's a lot of people in my audience are kind of small mom and pop investors buying rental properties. That's going to be a certain kind of approach, a certain amount of money, certain type of financing you're going to get. There's going to be certain types of properties you get that others won't get. You know, if you're a big hedge fund or a real estate investment trust, you're going to buy different properties than a small player. So that's why you start by thinking about what kind of player am I, and then what kind of properties, what kind of capital, and then the external environment is what keeps it interesting. This is why the game always changes. There are technology changes, there are different trends of demographics, people moving around. And so really this is kind of like a big picture view of your real estate game, and you need to learn and pay attention to each one of these. And every time you do a deal, you need to be asking yourself the questions about properties, about the external environment, about capital markets, and about what kind of player you are. So I think this will all make sense as we get into some of the other ideas, but just keep this lens in mind that this is, if you look at real estate as a game, it can be kind of fun. This is a fun game. Don't take it too seriously sometimes, but also that you study it and become an expert, become a professional at the real estate game, and get to know each of these pieces of the game. You'll become a lot better. The second big idea from the book is called the scorecard. So if we're playing a real estate game, you got to keep score, right? If you're playing basketball and you're just playing pickup and shooting around and not keeping score, not quite as interesting. And so you do have to keep score. And the first thing you think of course, is money. And so money is a very important way of keeping score. It's one of the primary ways that we do that in the business world. But William Poorvu made an important point that if the people he's known who just focused on money, it's not that money's not important, but if that was only their focus, that's typically how they got in trouble, because they started forgetting about actually the order or the priority of making money. That there's a lot of other scorecards, the social scorecard, what kind of impact you're having on your community, on your society, the environmental, the aesthetic, the personal, and all of these are really related to people. And if you expand on the idea of people, is on your community, it's on your society. And really the main question, the core of the issue of business and of the real estate business is, are you adding or subtracting value to your customers, to your investors, to the people in your society? And if you start taking shortcuts where, yeah, you make money this year, but you've not done all the maintenance on your property, and you're kind of making a little slummy property that makes the street and the neighborhood get worse. If you're attracting worse tenants because you're not taking care of your property, if you're just not keeping some of these other pieces of the scorecard in mind, yes, you might make money over the short run, but you're extracting, you're not adding value. And so the reminder here is that running numbers is not the same as creating value. Creating value comes first, running numbers is a byproduct. So that reminds me of one of my favorite basketball coaches was John Wooden, UCLA, and he was one of the most successful coaches in terms of the scoreboard. He won a lot of games, his teams won championship after championship after championship, but if you look at his approach, his philosophy to basketball, it was on making today's practice a masterpiece. Tie your shoes as well as you can. Shoot as well as you can, practice as well as you can. And if you do these things, if you play together well, if you add value in the context of real estate, then yes, you will make money. But if you make money, if you just try to pad the scoreboard without focusing on the main thing, it's a hollow success and it's going to catch up to you. So I really think that's such an important lesson that we can see here in real estate investing. It applies to all sorts of other parts of life, but just keep that in mind when you're looking at the scorecard. It's really all about people and it's all about adding value. So in the next idea, I want to talk about an actual investment strategy called value investing. The third big idea is called value investing in real estate. And here's a quote from William Poorvu from the book. Learning to be a value investor is the best long-term strategy for real estate. So if you haven't heard of value investing, this is a big topic, but I just really wanted to bring this up. I'm a big fan of Warren Buffett. If you follow my channel or my blog at all, you know that I read a lot of books by Warren Buffett, and a lot of his lessons are less applicable for us as ordinary investors to the stock market and to the business market as a whole that he invests in, and more applicable actually to real estate. Because value investing, if you had to break it down kind of what it's all about, it's about looking at value in a business, but paying the right price for that value. Warren Buffett has been quoted as saying, price is what you pay, value is what you get. So you identify how valuable is this business and you pay a price that's typically below the long-term value. Not necessarily below today's price, although that would be nice in real estate to buy it below today's price. But what you're looking at is the total value of an investment, looking at the today's value, what you could resell it for, but also the future values. How much cash flow am I going to get? How much price increase am I going to get over time? And maybe could I add some value to that property? In particular in real estate, that's one of the best ways to make money is by figuring out a way to change the scenery, to change the property, to change the landscape, to maybe divide the lots up, maybe to combine lots. There's a lot of entrepreneurial ways to add value, but you got to pay the right price for it. And then you got to make sure you time it correctly. But be careful with the timing issue. It's not that necessarily you want to time the market and figure out how to sell it right at the peak or buy it right at the bottom. Although that's, you do want to understand the cycles of real estate. It's really more about patience. It's more about selling at the right time. And that could be when if you have a property that is a cyclical property, it's not a long-term hold, that you bought it for the purpose of buying it low and selling it high, like a flip, or maybe like a short-term buy and hold rental property, being patient enough to sell it at the right time, but also being patient enough to hold a property long run. Buy and hold real estate is one of my favorite approaches. Warren Buffett says his holding period is forever on his investments. And so patience is a virtue as an investor. Not getting in with the crowd and always rushing to sell something or rushing to buy something, always looking at the price, making sure you're buying a good price for the value you're getting, adding value to it, being patient and looking at the timing. Those are some of the core components of value investing, but it's a big topic. I'm actually going to do some future videos on value investing in real estate and how to apply that strategy. But know for now, this is one of the best long-term wealth building strategies. Warren Buffett agrees with that. William Poorvu does. And I also have applied that a lot in my own business. The fourth big idea I want to share is something called back of the envelope analysis. And this is something the author spent a ton of time on in the book. And the first time I read it was probably my biggest takeaway. This is such a big idea because if you look at what practitioners, the people who actually do the business, people like my friend Nasser in Charlotte, who also has a YouTube channel called The Real Estate Guru, the people who do the business, check out Nasser as well. They use something called a back of the envelope analysis, which is more of an informal, kind of quick and dirty analysis. So this is not necessarily using fancy spreadsheets, although spreadsheets are great. I love spreadsheets as well. But what practitioners do, even with billion-dollar deals, Warren Buffett does this, I've heard him say, is that you do this quick and dirty analysis, just more of an approximate analysis, something to try to get, accurate, but not necessarily precise. You're not trying to get down to the decimal place on the numbers. You're just trying to look at the rough numbers, kind of round up a little bit. And what this does is this exposes the assumptions for the deal. Because what you want to do as a practitioner, somebody buying property, is you want to look at the basic numbers to see what are the risks and how much of a return am I making for those risks. And you can get that often from some very rough numbers. If you have to go look at to the third decimal point to know whether it's a good deal or not, it's not a good deal. It should be very obviously a good deal, even without being that precise. So what are some of the tools? There's a lot of different approaches to back of the envelope analysis. I actually have a whole video on it, one of my more popular videos on my channel called Back of the Envelope Analysis, How to Run the Numbers. So check that video out. I think you'll like that as well. But here is just some examples of some that William Poorvu shared and that I also use in my own back of the envelope analysis. He looks at things like cost per square foot. So what does it cost to buy this property on a per square foot basis? And then you often compare that to what does new construction cost per square foot? So if you're buying something at $100 per square foot and new construction is $200 per square foot, that may or may not be that in your area, but let's say it is, you're building a margin of safety. You're more competitive when you're buying a property below the replacement cost, because it's going to be hard for the competitors to rent it at the same values you are, because they have to build it and then rent it at a higher price. So that's one way of looking at your property, just kind of dollars per square foot. You also want to look at some of the numbers on a rental basis. So net operating income, or kind of a cousin of that called cash flow from operations. You want to know how much cash flow is left over before I pay a mortgage. So just assuming I had no mortgage on the property, after taking out all my other expenses, also setting aside money for capital expenses, things like that, how much is left over. And I have videos, and if you look at that video on back of the envelope analysis, I explain some of these in more depth. You also want to know finance cost. You want to know your cash flow after finance. So over here was before your financing. This is after your financing, because most investors do use debt or some kind of financing. And then you want to look at some kind of return. So you could look at a yield or a return on asset. This is assuming you had no debt. So using that NOI or the cash flow number, if I just bought this property for cash, what kind of return am I getting with the yield? Some people use a cousin called a cap rate. That's a very popular term. These are just more kind of investment oriented. Cap rate's more about valuing a property. I've got a video on cap rates too, if you want to check that out. And then cash on cash return or return on equity. These are looking at what kind of return you're actually getting on the cash you invested in a property. So all of these, again, are with rough numbers, but they tell you some of the key metrics. I look at it like if you're flying an airplane, you have a dashboard with all these like kind of gauges and things. It tells you what your altitude is, how fast you're going, whether the oil pressure is okay in there. That's what these are like. You want to know, am I going down or am I going up? Is this a good deal? Is this not a good deal? And you can do that with a back of the envelope analysis. The fifth big idea that I want to share with you from the book is something called case studies. Now, if anything, the greatness of this book, I think, are in the stories. And case studies are really they're realistic stories that have numbers behind them. So they're very applicable to business situations, to real estate situations. And case studies are really the core of what's taught at Harvard Business School, from what I've read. So William Poorvu is a professor at Harvard Business School. And what they use is they teach concepts, of course. They teach strategies, techniques, but the backbone of teaching those is something called a case study. It's where you share a realistic story from real life. Sometimes you change the names to preserve people's privacy, but you share these stories behind the scenes, the details, the numbers, and it preserves the complexity of a real estate deal, of a business situation. And that's the key. And that's why I love books like this. And really what I try to do with this YouTube channel and with my podcast is try to tell stories, to try to tell real life situations that, yes, provide teaching lessons, they provide techniques, they provide things like you can learn how to use a BRRRR strategy, you can learn how to use a debt snowball, you can learn how to buy and rent properties. Those are strategies. But when you look at them in the context of a real life situation, you can see how life is not simple. Applying this to real life is not simple. And sometimes that's where we all get stuck. When we learn a lesson on YouTube or in a course and we go try to apply it to our life, it's kind of like a puzzle piece that doesn't fit. Life is the dynamic of real life changes, the shape changes a little bit, but by studying case studies, you can kind of get that complexity of how it's applied. And then you can not necessarily go to try to do it exactly like they did it, but you can take some of the gems, some of the lessons from there and apply it to your own situation. that is the art of business. That's the art of investing in real estate. That making good decisions is learning from other people's stories. So I encourage you to read the book just to get to some of those case studies there. There are case studies from William Zeckendorf, who was a big-time investor in New York City and around the country in the 40s, 50s. And this was incredible, both in his, kind of how he did some of his deals, but also some of the mistakes he made. He ended up crashing and burning and losing everything because of over leverage. And so there's stories from people like him, and also just simple stories from students who bought a property or two after they got out of school, and this person the author happened to know them, and everything in between. So make a point of collecting case studies for yourself, studying YouTube channels like this, where I share my own numbers on deals and other people's numbers, read books like this. That's going to be one of the best ways to learn. And eventually you'll get your own case study. Be sure to share it with other people and teach it and kind of pass on the stories as well. I'd love to hear from you in the comments below. Which of the ideas I just shared was your favorite, was the most useful to you? And if you've read the book, I'd love to hear your thoughts as well. If you liked the video, be sure to hit the thumbs up, the like button to help me spread the word on YouTube. And if you're new to the channel, be sure to hit the subscribe button and the little bell so you don't miss anything. I have new videos that come out every Friday morning and new podcast episodes that I upload every Monday morning. If you like this video, I think you'll like my next video where I give my favorite ideas from the book, The Millionaire Real Estate Investor by Gary Keller. You can see a link to that video below in the video description. There'll also be another one here somewhere above me. You can click on that. You've been watching Coach Carson TV. This channel is all about investing in real estate, achieving financial independence, and doing more of what matters. My name's Chad Carson. You can also call me Coach, and I'll see you next time.